evening, traders. Today's Tuesday, February 24th. Markets are closed. And I know that some of you are getting quite emotional, thinking the bear market's back, when all we have is the retracement. And I'm going to actually show you facts and not opinion, that if these trends hold, it is a bear trap. Okay? So let's not get too emotional and up in celebration about what happened today, because all we did was retraced to the January 31st pre-market low on the 65-minute chart, and we didn't even go lower than that. It is a 100% retracement of this up move, of this breakout up move. So in traditional Fibonacci speak, it's just a retracement. Okay? We're still making higher lows. So you can't sit there and say, we're going down to SPY 340 again, when this was a retracement move. I've been saying that even last week. I said, you guys, we're still making higher lows. Okay? And we gapped down today. What happens when we gap down? Remember what happened last time at SPY 396? We came back and filled that gap, didn't we? All right, so next slide. I think some of you guys need a history lesson. 100% of the time, 100% of the time, when SPY futures MACD does not go below the -20 line, the uptrend is retained. Period. Full stop. That's it. Only twice in December, this was around FOMC, it went below, and then we went down. But since then, it has not gone below the -20 line, and tonight it is curling right at -19. Last time on January 20th, it hit the -20 line, and what happened after that? Okay? These are facts, not my opinion, and not your opinion that I hear in the comments that, oh, see, I told you we're going lower. That's your opinion that you can't substantiate unless you can quote me something on the chart that I haven't seen. What I'm showing you right now are facts. From December until today, the only time the 1 hour MACD went below the -20 line, yeah, we did go lower, didn't we? But since then, it has not gone below the -20 line. And if that trend continues tonight, if it curls up at -19, then what are you going to say? All right, so let's just hold off on the cracking the champagne bottle that you think we're going to make the next leg lower, when the facts that you're looking at right now as of this moment don't support your opinion. Okay, this is what I showed on Twitter. This is the same thing that I just showed you just now on the previous slide. 100% of the time, if it does not go below -20, it goes back up. The uptrend resumes. I just showed you December, January, and February. Okay? That's like it, full stop. This is not subject to opinion and debate. Okay? Now, before you start jumping in jubilee, massive bullish divergence since Thursday 216. Up, 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 up. That was at close today. So you better watch out. Okay? So this is another fact. MACD bullish divergence. Big time. That's not my opinion. So this was similar to the first slide actually that I showed. This is the January 31st. This is today. We simply came down below. You'll see that better in the next slide actually. We came below that band, weekly EMAs, the SPY futures weekly EMA, the 2011 matrix blue line. We went below that band on January 31st, and we went below that band today. I believe in football speak, market makers are calling the same play. And if SPY futures hold above -20 tonight, they're going to get the same play called on you guys again. The trap is on. Okay? What you're looking at here are facts, not my opinion. Right? We got a nice big green thunderbolt right at close in extended hours. And as you saw that big massive bullish divergence in the MACD in the previous slide, that's what that is. It's close to zero. I think it's going to take it back. So there you go. Okay? So, I mean, like 99.99% of you guys who just want to leave a comment saying, haha, we're going down. It's like all you do is just look at price. But yet you can't tell me one indicator that you're using to substantiate your opinion. Okay? So it is what it is. Yeah, this is a bear trap because this weekly EMA right here, this red line has denied the markets all of 2022. And yet, when you come down to backtest it, you didn't even attempt to backtest and touch it again. That's when I knew. I was like, nah, something's not right. It wants another target. Because in traditional backtest rules, for those of you who actually trade, if the market makers intend for it to go lower for real, it's going to backtest like this, and you're going to get a big red candle rejection. And it forces it lower. You didn't even try. On the most important line of 2022, you didn't even try? Because you were going for 399 area. And once you get it, I think you're going to reverse it. Because actually, when you look at this, this is what I've been saying in all my previous videos. Consolidation under a major channel or a major line like the SPY futures weekly EMA 50. Consolidation under that is what? Bullish. This is the exact type of setup that was on January 31st, went underneath this band that you're looking at right here, and it ripped the other way. If SPY futures holds above -20, that's exactly what it's going to do. Okay? So when you leave the emotion out of it and you stick to the facts, maybe you can be a better trader. So this is true. It didn't even try to backtest it. It just kind of meandered down, meandered down, meandered down. The most important line of 2022, you didn't even try to backtest that. That's a true statement. If the markets really wanted it to go lower, like a lot lower, it's going to try to backtest it and then get rejected. As we've seen in those trades that I was sharing last week. I said you get your puts not on the initial red candle down, you get it on the backtest leg. It didn't even try to backtest it. That's when I knew something was going on. I was like, nah, something's up. Something's up. And I was saying that all day on Twitter. Yeah, see? Blue star example. This is a backtest right here. This late afternoon right here. This is a backtest. Down, 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 down. Back test. Okay? Yeah, I think the January 31st, same play is about to be called on the Bears again. They're about to catch you with the same play again. But they wanted enough time to pass, about 21, 22 some odd days, so that you kind of forget about it, because they're showing that same formation again. And now you have consolidation under this band right here. You have a big green thunderbolt wick, and futures are up tonight. Okay? These are the facts. These are not debatable. So at 2:05 p.m. Central Time, it would have been 3:05 p.m. in the final hour. I'm scaling long. I do think it's the January 31st same play. And so far as of right now, the data substantiates that decision. In futures, in overnight extended hours, and that sort of thing. Oh, that's just me talking about the green lightning bolt right here. Same right here. So, here's another point I want to call out that is a fact. A 100% fact, since you guys like to talk about 100% in the comments section. It is a fact that today it went through the half channel line, the blue channel line, half channel, blue channel, weekly EMA 50, the black channel line, which is the quarter 1/4 line, SPY futures weekly EMA 50, the matrix 2011 blue line, and then this, it finally found support here at this 1/8 line down below. Why was it not easy to get puts? Because in all 100% in January and February, 100%, if you don't believe me, go back and look at all my thumbnails where I said trap. 100% of the time in January and February, if you went below or messed around with these channel lines, it ripped the other way. 100%. So that's why it's not easy just to get puts today, because too many of these critical lines were there. I was like, I'm not getting puts. No way. Because I don't know which one of these zones the market is going to rip the other way, as it has done in all of January and February. So you can sit there and say, well, I got puts today. Yeah, were you the same guy who got puts on all my episodes where I said, yeah, you're going to get trapped? And you did. It ripped the other way on you every time in January and February. So I didn't place a trade at all today until 3 p.m. Eastern Time. When I was watching it all day, I already did my due diligence. I said, you know what? This looks too much like January 31st. And so far, it is shaping up exactly to be that way. So far. Okay? So, this is all facts. This is not my opinion. So, you need to just be careful about breaking the champagne bottle that you think this is all over based on your opinion. When I just showed you everything here that says, not so fast. Please feel free to follow me on Twitter, where I give real-time tweets. Today I didn't place a trade till 3 p.m. in the final hour. Got calls. Don't forget to listen to your favorite music while you're trading, as it makes a difference to allow you to get into your flow state and to get into your zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.